Welcome to Moneycontrol's Business Roundup. Here are the key developments. Markets end higher ahead of key US Fed outcome. Maruti Suzuki Q1 FY25 net profit beats estimates. As per official, government may rise STCG about 20% in future. A Moneycontrol exclusive. Fiscal deficit narrows to 8.1% of the full year estimate in Q1 FY25. An NCLAT defers settlement between Byju Raveendran and BCCI after lenders sound alarm. Now let's dive into the top developments. Indian markets closed higher, tracking gains in Europe and Asian equities ahead of the key US Federal Reserve interest rate outcome, which is due later on Wednesday. At closing, the benchmark Sensex rose by 0.35% to 81,741 points, while the Nifty 50 index settled at 0.38% higher at 24,951.15 points. Among sectoral indices, Nifty Metal was the top gainer, up by 1.2%, followed by Nifty Pharma and Media, each up over 1%. Nifty PSU Bank and Nifty Realty were the losers, both down by 0.4%. Maruti Suzuki India Limited reported its Q1 FY25 net profit grew by 47% on year to Rs 3,650 crore, beating market expectations as softer input prices boosted profitability. India's largest car makers' April-June revenue rose by 10% to Rs 35,531 crore from Rs 32,327 crore in the same quarter a year ago. Maruti Suzuki saw an inventory gain of Rs 895 crore during the quarter, rising from just above 100 crore rupees a year ago, showed the financial results. The company sold 5.22 lakh vehicles during April-June, up by 5% year-on-year. As per a senior government official, the government may consider further raising the short-term capital gain tax in the coming years. The official, speaking to Moneycontrol on condition of anonymity, said the gains from short-term trading, referred largely to shares or mutual fund units held for less than a year, should not be equated with investment, and suggested that the current rate of 20% is reasonable but could go up. He also added that the higher tax rate on short-term gains would not adversely affect the economy or the capital markets. The Union Budget 2024, presented on July 23rd, raised the STCG tax on specific financial assets to 20% from 15%. As per the government data released on July 31st, Centre's fiscal deficit narrowed to 8.1% on the full year estimate in the first quarter of the year, compared with 25.3% during similar period last year. The fiscal deficit had narrowed to 3% in the previous fiscal, given the benefit accorded by higher than expected RBI dividend of 2.11 lakh crore. The government in the budget announced on July 23rd further reduced the fiscal deficit target to 4.9% of the GDP, compared with 5.1% target set in the interim budget. The National Company Law Appellate Tribunal on July 31st deferred accepting a 158 crore rupees settlement between Byju's founder Byju Raveendran and the BCCI, Board of Control for Cricket in India, after the US-based lenders of the metal edtech firm questioned the source of money. Calling in a tainted settlement, the lenders said it was being paid from stolen money and requested the tribunal to reject the agreement. NCLAT asked Raveendran for an undertaking that the source of the money was not tainted and the Byju's founder didn't violate its orders in raising the money. It also asked the lenders of Think and Learn Private Limited, which operates Byju's, not to constitute the committee of creditors till August 1st, when the case is expected to be heard next. And that's the wrap for the day.